1. Premium. The premium is the amount of money an individual or business pays to an insurance company in exchange for insurance coverage. Premiums are like the subscription fees for life's comedy show. You pay up front for the laughs and hope the punchlines are worth it. 2. Policy. A policy is a contract between the insured and the insurance company that outlines the terms and conditions of the insurance coverage. A policy is like the instruction manual for navigating life's obstacle course. It's full of fine print and hidden surprises. 3. Deductible. The deductible is the amount of money the insured must pay out of pocket before the insurance company starts covering costs. The deductible is like the cover charge for the insurance party. You have to pay your way in before you can start enjoying the festivities. 4. Coverage. Coverage refers to the specific risks or events that an insurance policy protects against. Coverage is like the superhero cape that shields you from life's unexpected disasters. It's your very own financial fortress. 5. Claim. A claim is a request made by the insured to the insurance company for payment of benefits covered under the policy. A claim is like the cry for help when life throws a curveball your way. It's your lifeline in times of trouble. 6. Beneficiary. A beneficiary is the person or entity designated to receive the benefits of an insurance policy in the event of the insured's death or other qualifying event. A beneficiary is like a lottery winner of the insurance world. They hit the jackpot when you hit the roadblock. 7. Policyholder. The policyholder is the individual or entity that owns the insurance policy and is responsible for paying premiums. The policyholder is like the captain of the insurance ship. They're in charge of steering through the stormy seas of risk. 8. Underwriting. Underwriting is the process by which an insurance company evaluates the risk of insuring a potential policyholder and determines the appropriate premium. Underwriting is like the insurance company's version of, "Are you smarter than a fifth grader?" They're trying to figure out if you're a good bet or a total bust. 9. Exclusion. An exclusion is a specific risk or condition that is not covered by an insurance policy. An exclusion is like the bouncer at the insurance party. It keeps out the riffraff and unwanted guests. 10. Risk. Risk refers to the likelihood of loss or damage occurring due to a particular event or circumstance. Risk is like the spicy salsa of life. It adds flavor to the otherwise bland buffet of existence. 11. Term life insurance. Term life insurance is a type of life insurance policy that provides coverage for a specific period, typically 10, 20, or 30 years. Term life insurance is like the rental car of the insurance world. You're covered as long as you keep paying the rental fee. 12. Whole life insurance. Whole life insurance is a type of permanent life insurance policy that provides coverage for the insured's entire life as long as premiums are paid. Whole life insurance is like the eternal flame of the insurance world. It burns bright until the end of time. 13. Universal life insurance. Universal life insurance is a type of flexible, permanent life insurance policy that allows policyholders to adjust premiums and coverage levels over time. Universal life insurance is like the chameleon of the insurance world. It adapts to your changing needs and circumstances. 14. Claim settlement. Claim settlement is the process by which an insurance company pays out benefits to the insured or their beneficiaries in accordance with the terms of the policy. Claim settlement is like the negotiation table of the insurance world. It's where you hammer out the details and hopefully come to a mutually beneficial agreement. 15. Indemnity. Indemnity is the principle that insurance should compensate the insured for the actual financial loss suffered, up to the policy limit. Indemnity is like the get-out-of-jail-free card in the game of insurance. It protects you from financial ruin when life deals you a bad hand. 16. Policy limit. The policy limit is the maximum amount of coverage provided by an insurance policy for a particular risk or event. The policy limit is like the speed limit on the insurance highway. It's the maximum velocity at which your coverage can travel. 17. Risk management. Risk management is the process of identifying, assessing, and mitigating potential risks to minimize the impact of adverse events. Risk management is like the tightrope walk of the insurance world. It's the delicate balancing act of avoiding catastrophe while still taking calculated risks. 18. Premium adjustment. Premium adjustment is the process by which an insurance company may increase or decrease the premium paid by the policyholder based on changes in risk factors or coverage needs. Premium adjustment is like the yo-yo diet of the insurance world. It's the constant fluctuation of costs and coverage levels. 19. Coinsurance. Coinsurance is the percentage of covered expenses that the insured must pay out of pocket after the deductible has been met. Coinsurance is like the potluck dinner of the insurance world. Everyone brings something to the table, but you still have to chip in your fair share. 20. Rider. A rider is an optional add-on to an insurance policy that provides additional coverage or benefits for specific risks or events. A rider is like the extra cheese on the insurance pizza. It's the topping that takes your coverage from ordinary to extraordinary. Subscribe for more explained videos.